genuine question. Before we go into this new year, what's going to happen? What's going to change? Are you going to go into the new year saying, yo, this year's our year, man. We're going to go in, hit our TPs, become profitable. And you know what? We're going to have a 100% win rate this week, next week, next month, and the year, baby. TPs for the win, Blues and MetaTrader, tap into the signals group. And do absolutely nothing about your life in trying to ensure that happens. And or are you going to go into the year with all the momentum you built and keep it pushing, baby, pushing, Pete, keep it pushing. In all seriousness, you determine that. Don't be like everyone else saying this year's gonna be our year and do absolutely nothing about it. The cards are in your hands. God has aligned everything perfectly in order for you to make sure this works out. Now it's your job to not mess up. Let's get into it. Retracements, you read the title, we got it right here. Retracements, how to locate, how to execute off of. This is probably going to be 2 parts just because I really want to dive into this. This is properly executing on retracements is one of those things. If you don't get right, you will get stopped out majority of the time. So I want to make sure you guys really understand this concept. If you guys did not watch last video, daily bias, first link in the description. Hopefully, K, if you can put a thingy, link in the description, like a YouTube thingy, link description. And if you're not in the Discord, please join the family. What are you doing? You're missing out. It's 2024. You need some people around you. Trading is lonely. We're here for you. Join the Discord. The link in the description too. Hopefully Kay can put that up there. Bam. But now getting into it. Let's get straight into the charts. So we're gonna start with what? Retracement tools. Why do we use retracement tools? Let's talk about it real quick. A lot of you guys understand retracement tools, but you don't understand why we use them. We use retracement tools because we believe with SMC and ICT that these price points that we mark out as retracement tools are price points that when hit, it allows banks to continue to fill orders when within the market. Why do banks have to fill orders here? Well, I'll tell you why. Because they are moving so much money within the market, they can't just go into MT5 and MT4 like you and I and place 1,000 lot sell on gold and be like, boys, we're bearish today, sell, and have the orders executed. No, they have special programs, special softwares in order to fill their orders, and that's why we believe when price reaches certain price ranges within price, that's a lot of prices, pricey, this allows banks to fill their orders, continuing overall movement. We have 3 main retracement tools used: 1, fair value gaps, 2, equilibrium, and 3, order blocks. Each one is unique in its own character, but they all do the same thing. Allows market makers, allows the banks to go in and fill their orders in order to keep it pushing, keep price pushing. So those are a few examples of, well, those aren't the examples. We're about to write out the examples right now, so get ready. Bam. This is one example right here for value gap. No time wasted. Fair value gap right here. Okay, Lonnie, I know what a fair value gap is. I execute off of them all the time, but I'm still getting stopped out. Yes, that's why I'm here. Because there's a proper way to execute within fair value gaps, and there's a proper way to know, okay, when is a fair value gap? When are these certain retracement tools valid in order to execute off of? And I'll tell you this. This is how you're able to determine when a retracement tool will be valid compared to when it wouldn't be valid. Very, very simple. You go on a macro time frame and you get a bigger picture, you get an understanding for price action. What are we doing on the larger time frames? Bam. If 1 hour is bearish, okay, what should that tell us? We are looking to validate 1 hour selling fair value gaps or selling retracement tools. So with the overall bullish retracement tools, your mind should be focusing on executing when price reacts off of these selling retracement tools and invalidates these bullish retracement tools. Understand that. You're getting a overall picture of the market. You have to know where you're going on the day. That's why the last video we emphasize daily bias. You have to understand, because we're breaking it down. We're slowly breaking it down. Daily bias, retracements. Next, we're going to get into, don't want to spoil it, but we're going to continue breaking it down so you understand how important it is to have your daily bias correct. Know where you're going on price action. That's one. So what does this tell us? Okay, we're bearish, meaning we're looking to react off of selling fair value gaps. We're looking to get our entries in off of selling fair value gaps and looking to invalidate buying fair value gaps. Why? Because that's following overall price action. Capiche? Capiche? Let's get into it. So one, we have an example of a fair value gap right there. Why is it that, Lonnie? It's my first time watching your videos. I don't know what a fair value gap is. Let me explain. Let me draw you a beautiful image. Oh shoot. As you can see, I'm an artist. I'm an artist. This is an example of a fair value gap. It's a 3 candlestick pattern that we look for when within the markets. Why is it called a fair value gap? Because within this middle candle and these, and I'm emphasizing this, focus on the middle candle and the wicks of these 2 candles. There are no overlapping wicks, aka no contradicting orders, selling or buyers or sellers, when these candlesticks had formed, leaving an imbalance, a gap within the market. Best way to think about it in 5th grader terms, remember this, just look for a gap within the market. This is a great example here. Empty gap within the market, no wicks. That's how I always thought of it. That's how I always looked at them, and I would always look at it as, okay, so when price retraces into here, we're essentially filling those contradicting orders we never filled, pushing price in the proper direction. And that was a great example. That was genuinely a great example. That's one of the best examples I ever did on fair value gaps. But anyways, with that case, that is fair value gaps. Now, what else do we have? I mentioned order blocks. Order blocks, order blocks, order blocks. What are we looking for within order blocks? Let's find an example. So now that we're back, we had to go look for a good example. I wanted a nice clear picture. We see an order block right here for you guys that did not see it and or are curious. Okay, what are order blocks? What are liquidity sweeps? When are these formed? Second link in the description is going to be the video on order blocks. Check them out. Great retracement tools. Very, very important retracement tools too. But in that video, we broke it down how to properly spot. In this video, we're still going to break it down how to properly spot everything and how they're formed. So with that being said, when is the order block formed? It is formed after the liquidity sweep. So the order block is from the price range of the low before the liquidity sweep all the way to the high. So from this 92844 level to this 94735 level, that is the order block. That is where the liquidity sweep was formed, from that low. Remember that. Remember as well, have a video on it, check it out, link in the description, but to get the full understanding. But for you guys that do know what it is, bam, we have the order block right here. What does this do? Well, it has the potential to fill more orders when this price range gets tapped into. So you can see in this example, we were overall bearish. We're looking for sells. Price came up, took out highs on a 4-hour time frame. On daily, it did as well. For sake of this, I'm not switching to daily because I don't want to have to go and look for it again. But also came up, took out highs on daily, broke structure to the downside, continuing bearish price action. Once price action retraced into it, right here, we see what did it do? It filled more orders, rejected, broke structure to the downside, continuing overall price action. Bam. That's the example of order block and equilibrium. For you guys wondering, simply put it, it is the 50% mark of overall price action. Why is it the 50% mark? Because that is where banks like to buy within discount. Let's go find another example and come back. Bam, now we're back. We did find a pretty nice example here, and I'm going to show you why, because we have overall confluence of this too. So if I switch to a 4-hour time frame, let's go into replay mode right here. 4-hour time frame, this is a 4-hour fair value gap, and I'll be very surprised if I'm incorrect about that. Obviously not. Anyway, we have a overall 4-hour fair value gap right here. So now we're putting our confluences and tools together, retracement tools, fair value gap, bam. And what do we have down here? Well, here we did form a buying order block. Price came down, swept these lows on hourly for liquidity, bam, 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 before doing what? Pushing to the upside. So here we had an opportunity for orders to get filled from what price range to what price range? From 19,365 to 19,3242. This is what? The order block. And then here we have the what? I almost said it. The equilibrium. What is equilibrium? When price reaches a 50% level of the overall, the 50% level of the overall trend. How is this plotted? This is plotted from the low of trend to the high, and you wait for the retracement. This is an all confluence trade telling you we are bullish, we're looking to go up, we're looking to play the buy. November 15th, we 100% played the buy here. I'm sure I could go find an example trade of a trade we actually executed on. But this right here is an example of using your retracement tools in order to play with overall price action. Here, we waited for the market structure shift. We didn't know here what was happening. Yes, we retraced into other overall macro retracements for value gaps, for order blocks, whatever the case is. But we allowed price action to develop here. 4-hour breaking structure to the upside. Remember what I said in the last daily buys video. Wait. There's certain days where you wait to get a full picture. We waited. Bam. Got the understanding we're bullish. Okay. Fair value gap form. We never came down and retraced back into the order block. That's okay. Guess what? We retraced into the fair value gap and equilibrium. Okay, cool. We have bullish bias. We know we're going up. What are we looking for? What are we looking to validate? Buying fair value gaps. We're not looking to validate selling fair value gaps right now. We're looking to validate buying. Why? That's following overall price action and trend. Remember that. The fair value gaps, I'm going to say this for the YouTube shorts, of course, and for you guys to get it in a single sentence, because you guys know how I like to do it. Do single sentences here. Keep it simple. When are fair value gaps and retracement tools valid? They are valid, and how you get the picture, bigger picture. We messed it up. Let's say it again. When are retracement tools valid? In order to be able to understand which retracement tools are valid, you have to step out of the time frame you're on, look at the overall macro, the bigger picture, and see where is price trending? Where are we looking to go? And when you understand that daily bias, you're able to scale down on time frames and see, okay, what retracement tools are we looking to validate, whether buying or selling? If your overall time frame is bullish, you're looking to validate buying for value gaps. The selling for value gaps, you're looking to invalidate. That is how you execute and properly execute off of the right retracement tools instead of the incorrect retracement tools. But remember, that does not mean certain opposite trend retracement tools cannot get validated as well. There's always that potential. Always that potential. Be wary. But now, finishing off, this is an example of trading with overall price action. We're going to go into next episode. What happens when price makes a lot more deeper retracement before the overall move? How do we execute off of that? How do we go in and still understand, hey, are these fair value gaps valid? How do we execute off of them? And how do we not get stopped out when trading them if we're looking to trade them? So that is all we have for this video, ladies and babies. Oh, shoot. Control. Bam. That is all we have for this video, ladies and babies. All links in the description. Do everything. Go check out old daily buys videos, old order block retracement videos, everything of the sort, old liquidity sweep videos, join the Discord, everything of the sort. Continue to keep learning. Episode whatever will be out shortly after this one. We're gonna get to editing. I love you guys. Gonna get to cooking, and I will see you in the next video. Love you guys. Peace. Bam, baby. Should I get Tommy for this? Nah, Tommy's on the floor. He's out. We'll get Spidey for this. See you later. Peace. Capiche?